Hey everyone, welcome back. Today's gonna be a pretty cool little episode. I am going to go over how I got 870 pips in 2 days on 4 positions. And then I'm gonna kind of show you where the idea came from and whatnot, and basically how the whole trades went together from start to finish. And then I'm gonna show you a cool little thing between DXY and gold. By the way, if you're new to this channel, definitely subscribe. And one thing I wanted to mention too, we are having our Black Friday sale right now where all our services are 50% off. That's our signals, that's our analysis group, that is our Discord if you want to actually learn how to trade gold like we do. I will leave the coupon and the code in the description for those of you interested. Definitely take advantage of it. It'll never be this cheap again. Literally 50% off. And you can see here that I took these sets of trades by the screenshots here that I posted. This first set I actually gave to our free signals group. This top set here, I actually even gave this out to my Twitter followers. Sometimes I get really bored and I just randomly send free trades on Twitter or Telegram. So if you don't follow me, definitely do. Anyway, guys, let's start from the beginning. So we're going to clear everything. Full transparency, by the way. I want to kind of talk to you about where the trade plan actually began to start buying and where I actually started buying and how it went. So first of all, my first idea to buy was here. I wanted to buy this. I didn't at this whole point. It's the Ukraine and Russia escalation that started driving this. But at this point, it was only talk. Nobody had launched any missiles. So I was going to execute this. I didn't because I was waiting for confirmation again. It was all just talk. Right around here somewhere, I think, was where Ukraine attacked Russia. So when I came in this day, I took a buy here. I took another one somewhere up here. I ended up breaking even on this one. I ended up losing this one. So that's kind of how this started. So it never took this. It went right to target. This was a loss on a break even. And then I took 4 more trades to finish the week off. And these are the ones I'm going to cover. So we could just show you guys what's going on too. Obviously, our ranges are bullish. What I want to mention is we took the highs, we took the lows here. So this is a pure manipulation. Usually when gold does this, it's only to continue in the same direction. Some healthy profit taking, some order restructuring, and price just continues. Once the orders get restacked, price generally continues. And I kind of seen this liquidity forming when we took this high, and that's why I took this risk right off. This one here, I was able to save a half a loss by reducing the stop. This is common. It's a common gold pattern. Anyway, that's kind of how the trade idea began. And the best entry actually came in London, which I'm not awake for. But London generally doesn't give good gold trades that often, but in this particular case, it did. And so right around here, we had right around here somewhere, there was something dropped that basically something else escalated with Ukraine and Russia. It's kind of hard to show you guys on this. So on the live camera, there was one of the candles came down really fast. So I hopped on Twitter just to see what happened. And this kind of confirmed what we had going. So this is where I took my first position somewhere around here. So we took the first one here. Let me just double check. So 40.69 and 43.66. 40.69. So this would have been the candle I executed on. So that was the first entry there. And honestly, I'm not really too concerned about choking the trade. Just before we get started too, I can show you guys how the targeting happened on this one. So we pull our first range. We pull our second range, and generally I find an intersection somewhere between 200 to 300 pips. And that is essentially my targeting. So if I go to the middle, that's generally kind of a happy median. If I'm running two positions and I'm running well over 200 pips on each one, I generally just go to the bottom. So it's kind of how targeting worked out on this first set of trades. Second set of trades, I actually closed early, and it ended up going to target, but it doesn't matter. We still pulled out. I think these two trades were 490 pips. The next set of trades were 380. So the second entry was somewhere around here. And this is just pure momentum. And you don't really need to cover that much on the second one. But for good measures, I would cover this low. I would cover the vectors. Price at this point generally shouldn't invalidate. And kind of see we're building, we're protecting at this point. Price should just continue. It's always the path of least resistance. So that was kind of the idea behind the first one. So again, we took out the highs, induced the lows, target the highs. It's a pure manipulation, and you just keep following the trend. Very common gold pattern. This happens a lot. So that's kind of how the first position progressed. So this one hit TP while I was asleep. Okay, so that's the first TP. Being honest, I thought about scaling in here, but I already had two positions. Had this been up a little higher, I probably would have taken a third position. Because at this point, I was risk off on the first, and I think on the second, I was half risk off. Had we gone sideways around here, I likely would have taken a third position. It was just too close to this position. So we didn't get any extra pips on that one. And if we go back to the 1 hour, by the way, obviously price is not even pulling back to the 50. We're just kind of running. So when gold's trending, generally, it's gonna react somewhere between here and above the 50. It's very rare that it'll even touch the 50. So usually the 236, 382, maybe the odd 50 tap, but even if it taps it, it'll wick it. It won't even body close. So hypothetically speaking, this is just pure bullish. The next target of interest for me, so the initial target I think I had was 2,700. So then I kind of lowered it to a more conservative 2,694. So this is the one I sent out on Twitter. It ended up going there, and I actually ended up closing early, and I'll explain that in a sec. So I had good cause. So this was the first entry. You guys can see how the lows are just getting protected. Algo essentially is holding these lows. So the first entry was 66, so somewhere around here. So that was the first entry. Second entry was 71, so I don't think we're in it yet. So like I said, it was 2,700. Then we reduced to 2,694, I want to say, which was the daily 618, I believe. So that was the initial target. I might have got that off by a few pips. Oh no, that's right. About 94 for the 618. So that was my initial target. All right. And I'll explain why we closed early in a second. So when price is going sideways like this, that's really good news for gold. Generally, it just pops. You can kind of see how these lows are holding. For a lot of guys, I think you probably consider this a break and retest. To me, this is the algo protecting, basically holding the line. So my second position was 71. Okay, so second somewhere around 71. So we entered this one in here. And you can see like this is just pure price action rating, following momentum. There's nothing complex about these trades. They're very, very simple. And that's essentially how you want to be trading. I don't need a chalk or anything like that. Like I have zero problems executing anywhere in there because I trust my system and I trust that it'll go to my projections. So the initial projections, I believe, so this is where we intersected. So 95 and 94 intersected between the daily. So, which is right before the 618. So I ended up closing out right around here somewhere. Reason being was, so we had a really deep liquidity pool here. And my thoughts were that maybe if I close this out, price comes here, I can look for an entry into 2,700 tomorrow. That was my thought process. So anyway, I secured the 380 pips there. Price, however, just stayed bullish on the Ukraine and Russia news, and it never pulled back. So just continued doing that. I didn't take another trade on Friday, but hypothetically, my next area of interest at this point would be probably just a bit higher. Just give me a sec. Where are we? I would say somewhere around 27 or so would be my next area of interest that'll react. So this would be kind of my next target. We'll see how Sunday night market opens. But my expectation is something in here will likely react. This was the Trump candle that sent price down. So I would expect a large injection of liquidity here. And there's a good chance we get some kind of reaction and price either retraces. So this is kind of one of those scenarios where we could see the last leg come down to complete this pullback expansion on the higher time frame. So that's the first scenario. Our second scenario is we get some kind of pullback, but we ultimately maintain a level that we don't go below, and ultimately we stay in the upper half of this whole leg. So basically, if I draw a fib on wherever the high is, price stays above the 50. As long as we stay above this 50, I would say we're still trending, we're still bullish. So it's that pivotal moment. If the war escalation news continue, it'll cancel this last wave out, which is likely higher probability at this point. We won't know right away. We'll have to see how orders restructure themselves. So probably something along this, and either price will do this, or price will pull back and continue down, in which case I would look for a short into here, and I would reassess price again. We start closing below the 50, I would say this low is gone. We stay above this 50, I would say we're going up higher. And that'll, of course, be case by case with the Ukraine news, as I mentioned. But yeah, these were the trades we sent out to our signals group. Like I said, I actually gave these freebies out. I don't usually give all our trades out, but this week, yeah, ended up between Twitter and our free group, I gave a set of trades out to each guys. So yeah, I hope you guys enjoyed this recap. If you want to catch more trades like this, like I said, join our Discord, learn how to trade, or join our analysis group and see my analysis and get into the trades yourself. Or if you want it completely stress-free, you can join our signals and I give you the TPs, stop losses, break-evens, everything. So it's literally all automated. All you got to do is get in, get out. It's very simple. Anyway, guys, I hope you enjoy this and I'll see you in the next one.